This content is brought to you by Uphold, which makes crypto investing easy. I've been a user of Uphold since 2017. They're one of my go-to exchanges. You can buy, sell, and trade cryptocurrencies on Uphold. You can also trade precious metals and equities. They have 10 plus million users, 250 plus cryptocurrencies, and they're available in 150 countries. As with all exchanges, you can buy and sell on them, but I highly recommend you custody your own crypto, not your keys, not your coins. If you'd like to learn more about Uphold, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Jack McDonald, who's the CEO of PolySign and Standard Custody. Jack, it's great to have you back on.
Good to be back with you. I always, as I just said, love these conversations with you. I think you're always pressing the right questions and the right issues to discuss. So I'm looking forward to this.
Appreciate it. Likewise, I always enjoy my conversations with you. Always great insight, and you guys are doing some really great things. Which, let's on that topic. What's new with PolySign and Standard Custody that you can share?
So a couple of things. Obviously, a lot happening within Standard Custody right now, given all of the different regulatory pronouncements and proposed changes that have come out last week on the custody rule. Some items related to staking, which while we don't stake, we support clients who do stake. We can talk about that. And just I think the whole market structure is changing here in real time. And so we're I think very well positioned to take advantage of that, and I'm sure we'll talk more in detail about what that means. Also making good progress on integrating the Standard Custody business together with MG Stover, the leading fund administrator. So we're always focused on that, supporting our clients in both of those verticals and where it makes sense to put them together. We've built some really great technology in the Stover business that we're now in the process of rolling out to clients. We've been using it internally, but now putting it in clients' hands. And I think that's going to really bode well for not only our client experience that we have, but also will be a growth engine. And then finally, AtomicNet, our settlement layer. There continues to be, I think, a growing thesis amongst capital market participants around the future tokenization of traditional assets, almost irrespective of cryptocurrency. And that's taking on renewed life, and so we've got a lot of things going on here.
For sure, and on the note of tokenization, we're seeing a lot of folks now talking about tokenization. BlackRock CEO Larry Fink and many bank CEOs as well. It's surprising. It's almost like something happened and it's a change in the air, and everybody's talking about tokenization of asset securities and whatever it may be on the blockchain, which is exciting. But
Yep.
It seems like the industry, to your point, the adoption of blockchain, the use cases are being discussed now.
I'm not sure that our listeners would necessarily agree with this, but I think there's a growing sense that, particularly among the TradFi professionals out there, that history may show that cryptocurrency was really a proof case for the underlying technology of DLT and blockchain technology that really paved the way for tokenization. Mm-hmm. And if you think about the TAM, or total addressable market, broadly speaking, other asset classes than crypto is where the real juice is here, in terms of just whether it's equities or credit instruments or real assets, real estate, et cetera. And to your point, there's been some very well-known, prolific proponents of tokenization. And I can tell you, we could knock on the door to the 10 largest asset managers in the planet, or the 10 largest, global custodial banks, and all of them, I'm confident 100% would want to have a conversation around tokenization and to get our view of what changes will take place. I was with one of the largest asset managers in the industry 2 hours ago, and they said, "What's your 3 to 5 year view? What's your 10-year view?" We've got a whole team of people here trying to understand what impact that's going to have on our business, both from a distribution standpoint, how we create these products, how we distribute them, and then what the downstream impact is to our business from just a middle and back office perspective. And we didn't talk about cryptocurrency for an hour, and it was all about this tokenization. We have a product and a service in AtomicNet that has a blockchain at our core, and we do essentially focus on atomic settlement around that you're I know you're familiar with Arthur Brito and David Schwartz that they've worked on, and we're getting some real interest across a broad range of institutions who want to learn more about that, potentially engage us in some pilot programs, and that's really really exciting in terms of where that business could potentially go.
For sure. I'm excited to see outside of the private blockchains, but which public blockchains are going to be selected. We've heard rumblings and pilots of happening on like Ethereum, the XRP ledger, and Algorand, and whatever it may be. I'm curious, which banks, which governments select which blockchains.
Right.
Yeah, that's going to be so interesting when those things are revealed.
That's right. And that's a tough question to try to anticipate what the future holds. We're taking the posture that A, we don't ultimately know, and B, there may be several, but our technology, our solution is agnostic to which underlying chain. We can work with many chains, we can work with few, so we don't have to solve for that problem. But that's a difficult problem to solve for. In the same way, we liken back to the early days of the internet. I think you're too young to remember, but some of us were at AOL, some of us were at Yahoo, some of us were at MindSpring, some of us were at CompuServe, and we could not email one another. You had to be within, the AOL network, and I could email back and forth other friends in AOL, but I couldn't email someone at Yahoo unless I also had a Yahoo account. And those environments did not speak to one another. And so we're really focused on an interoperable settlement layer, and that's what we're building towards.
Hard to picture a world where you weren't able to send emails between those different companies, right?
But really, in the same way that the internet is, a friction-free transfer of information, what we're focused on is the friction-free transfer of wealth, and ultimately how that gets democratized and gets woven into the foundational fabric of capital markets as we know it.
So let's real quick. I have a question that I've been thinking about for a while. With the tokenization of securities and you have commodities as well, how does that change the dynamic of markets? For example, if there's a product in the United States that's tokenized on a blockchain, is it then open to the entire world? Could you be in a country in Africa? Could you be in Australia? And where there were restrictions before, now it's borderless and 24/7 trading. That's kind of I know a lot in a question there, but what are your thoughts on that?
Well, I think you've hit the critical issue that is currently deterring more widespread adoption, and it's a lack of standardization, it's a lack of regulatory clarity cross-border. The technology exists to be able to effectuate what you just described. The regulatory environment does not, right? Because for what works here in the US doesn't necessarily work in Europe or in Asia or rest of the world. And if you could envision a world, which is very difficult to come by, but if you could envision a world where the standards were cross-border, truly global, and different regulatory bodies existed, then you start to mirror in somewhat of an ironic way, back to the early stages of the Bitcoin, white paper, right, where it was not only trustless but permissionless, and that you'd have this global peer-to-peer 24/7 sort of network for wealth transfer. That technology exists. It's going to take a long time, and I'm not sure we'll see it in our lifetime, where the globe is truly borderless in terms of the transfer of wealth, and where there are no regulatory hurdles that exist in one country and not another. That's a utopian view of the world. I think the technology would be there long before different sovereigns would actually agree to it. But I do think that there are already some initiatives that are showing real merit in terms of trying to create some level of standardization, for that. And there are others who are helping to pave that road. Our friends at Ripple obviously have been focused on cross-border transfers of wealth for a long time, and I think they've done yeoman's work in terms of identifying these issues and starting to come up with constructs, for how institutions, it's almost a B2B and then a B2B2C sort of structure that would ultimately exist. And so I think we'll continue to make progress, but that's, I think, to me, the most critical issue to try to think about how we can overcome that.
Now, speaking of standardization and regulations, we recently had an update around crypto custody from the SEC. And you're one of the folks I thought about because of standard custody and how does that impact your business. So I'd love to get your take on this proposed or a change by the SEC and how that impacts your business.
Yeah, well, and I thank you for mentioning appropriately that at this point it is only a proposal. That said, it got widespread support, from the commissioners other than Hester Pierce, who I think feels like it is going to create more friction than should be there. And so we'll see what ultimately gets adopted. I think similar to the president's executive order of the summer, one of the takeaways is that the SEC acknowledged that there's a there, that rather than kind of keeping the proverbial head in the sand, they've come out and acknowledged that qualified custodians are suitable counterparties to custody digital assets, that crypto should be included in the Investment Advisor Act as an asset class that the SEC would expect investment advisors to invest in, trade, custody, settle, report in the same way that they do other traditional securities. I think premised in what the SEC is saying is a view or a belief that these assets, broadly speaking, are actually securities. We can debate that, and I think that will certainly result in a lot of spirited conversation as to whether or not these assets are securities or not. I'm sure you're going to ask me my view on that later later in the show today, but put that to the side. I think what they went through was a checklist of what they would expect to see in a qualified custodian to meet this proposed threshold. For standard custody, it's really a very welcome proposed change because it mirrors in so many ways what we've already been doing since day one in terms of having segregated accounts, in terms of not commingling customer assets together with standard custody assets. The proposed requirement is to report quarterly to your investors. We report monthly to our investors. To be subject to exams, we've already been examined. It just kind of goes on, and the whole segregation of duties of not having the custody delivered in the same organization that also provides trading, lend, borrow, staking. Again, all things that we've done with our conflict-free model. I've told people really since the FTX debacle that all of a sudden boring is the new sexy. And you go back to this model where all we do is custody, assets and provide some escrow services. We don't lend, we don't borrow, we don't commingle, we don't give margin, we don't trade, we don't make markets, et cetera. All of a sudden, I think that view has been more refined, and coming from the SEC, which obviously only has jurisdiction over the U.S., I think in a way it's really providing a roadmap to investors and other buy and sell side firms about what sort of requirements would need to be made to satisfy the SEC. Whereas up until now, many have been operating really in the dark. And so that's I think that's a very positive, welcome change.
Yeah, my initial thoughts, similar to yours, was this is great. As the security commodity question to decide. This is great, and it's kind of like, why wasn't this in place in the first place? If you want to say it that way, and especially what happened with Celsius and FTX. What a mess, and of course, straight out fraud. And there's a lot of people who can't access their funds, and right. This standard needs to be lifted, no pun intended. And I think what you guys are doing, like you said, you're raising the bar and setting the standard there. And I've seen a lot of exchanges are putting out Merkle tree audits, proof of reserves, and so forth. But I still think, like, if their funds was custody with a qualified custodian such as yours, I think I would have peace of mind. A lot of people have more peace of mind that my funds are not being mixed with this and that and lend it out. I think it's just a really great change.
Yeah. Well, I don't want to speak to any one exchange over another, and I certainly don't pretend to know all the intricacies of how the different exchanges work. I'm sure I said on this show early on when you would ask me, why we set the business up the way it did. We believed from day one that there should be this segregation of duties between exchanges and custodians, mirroring what exists in traditional capital markets. And so that's really what, and Gensler's been talking about that for some time, but this really puts a fine point on that. And having, attestations from different exchanges saying we will attest to the fact that we have reserves, you're still believing the organization that's making that statement, as opposed to having independent parties either coming in and auditing it or segregating those functions between custodians and exchanges. So we certainly believe in your view that they should be segregated in the same way that qualified custodians work with exchanges for non-crypto assets. I think having the same best practice in place in the digital asset arena will prove very beneficial to institutions coming into the space, which is something that we all want.
So I know it's been just a short period of time since that announcement. Have you gotten phone calls as a result? Hey, we need to custody with you guys or whatever it may
Yes. The incoming has definitely picked up the pace. We saw one surge in demand post FTX where all of a sudden clients were saying, hey, maybe we need to think through again, keeping assets at an exchange, what the risks are there. And there are some I would call them operational challenges around doing that, because all custodians are not equal, number one. And the assets that are custodied at qualified custodians are a subset of the assets that get traded on exchanges. So even if you wanted to, if the exchanges trade things, it'd be tough to find a qualified custodian actually support. So it's not a perfect sort of solution in the same way that, you can go to State Street and custody every equity that would ever trade on the New York Stock Exchange. There's symmetry there. Not so in the digital asset world. But the point is absolutely having a qualified custodian, regulated, insured, et cetera, is a big positive. And then in the last week, not only from institutions who I think were really waiting for this sort of clarity and this guidance from the SEC, but also from other market infrastructure providers who find themselves in a position where they support the crypto digital ecosystem without a QC as part of their business. So they're on the lend, they're on the borrow, the trading side, et cetera. And what the SEC said is basically, if we take the assets from thinkingcryptocapital.com, move them to standard custody, it's in qualified custodian, hooray. If you're going to move that to another platform for yield farming or for trading, et cetera, and that entity is not a qualified custodian, and you are an investment advisor who is subject to the custody rule, all of a sudden at that point in time, that nanosecond, you would be in violation of the custody rule. And so we have already been building services around really escrow-like products where the asset can remain in our custody, but yet be pledged or delegated to other third parties with client approval and request, where you essentially get the benefit of having moved your asset to lend it, stake it, do whatever you want to do, but yet it's remaining in custody the whole time. So you as an investment advisor would satisfy the custody rule, but still be able to fully access the broader ecosystem around leveraging your asset however you see fit.
No, that's
so I think there's some really interesting partnerships that are going to evolve out of this. Again, not all custodians or QCs are equal, though, in terms of how they're set up. We happen to be set up in a way that's very compatible with that. And if I were to look out over the next 3 to 12 months, I think we're going to be entering into a number of really exciting partnerships where we provide our custodial service and support others, in the ecosystem, all for the benefit of joint clients.
Yeah, that's great. I mean, it sounds like you guys are ahead of the curve with this because you were building it right from the onset. And now the regulations are coming in place, and it just makes logical sense, right? Given especially what happened last year. In addition to that, while this crypto custody rule, I think once again a good thing, we were getting a lot of enforcement actions from the SEC and other government agencies. It seems there's something called Operation Choke Point 2.0. Stable coins are under attack. Paxos, which was regulated, they were asked to shut down BUSD. Kraken staking.
Yep.
Yeah. So what are your thoughts on what's happening here? And is this they're fighting us phase?
Right.
Yeah.
Yeah. I mean, I think, and I read the same press you do that, it feels like there's a lot of regulation through enforcement as opposed to legislation, which nobody likes, and nobody would suggest that that's an ideal way of going about regulating the industry. And I think I've got some level of sympathy for the regulators in that it's a very fast-moving industry where their primary purpose is to protect investors. And sometimes when they feel like that investor protection is being threatened, the most immediate and effective way of curtailing whatever they feel like is going wrong, and the most efficacious way of protecting investors is to, enforce as opposed to legislate. I can understand how that happens from time to time, but it's suboptimal. We all want, from an industry perspective, is clear legislation, and I think last week's pronouncement were a real step in that direction. We've got a whole lot more to go. As I said, these are just proposed changes. There's a 60-day notice period, or comment period rather, and so we'll see what transpires. I know we're looking to be involved there, and I'm hopeful that a lot of the regulatory action that's happening won't be too overreaching. I think there's a risk that would be fairly logical to expect that the early actions may be broad and wide, and they'll be refined over time. So I think we're going to see more of the same, to be honest with you.
Yeah, that's tough, because it's just, I don't know how as an entrepreneur you operate in these types of environments, and like Kraken, the U.S. staking is shut off, but friends in other countries can access it.
That's right.
Yeah,
it's certainly one of the biggest challenges. I mean, I've used the analogy before. It's like, getting on the highway in your car and there's no speed limits up, but you can be pulled over at any time for speeding, and the speed limit that one officer may use to charge you with speeding could be different than the next, and you're flying blind. I think we got some good guidance from the SEC, which we welcome, and I would ask for more, guidance. Obviously, we want it to be prudent and appropriate, and taking a lot of input, which I think the regulators are solicitous of input. I think they're actually, trying to do the right thing. It's tricky, but I think we are making some progress. But it's certainly one of the challenges. And as you reference, too much scrutiny, too much constraint, or curtailing of innovative initiatives here will only drive that business offshore. And I think we're going to unfortunately see a lot more development outside the U.S. than in the U.S. It seems inevitable.
Yeah, and I know a lot of people are looking at the SEC versus Ripple lawsuit, hoping Ripple gets a win there, as well as Grayscale versus the SEC for a Bitcoin spot ETF. What is your take on those lawsuits, and do you expect other companies to then start suing the SEC, which is, the whole scenario is just a bad situation, but it seems like some of these companies may go on the offensive and sue the SEC for clarity.
Yeah, I think I wouldn't think that you're going to see a lot of companies take on the SEC with lawsuits. I think we've got, in the case of both Ripple and Grayscale, large, well-funded organizations who have the resources to do it, but more than just the resources, they've got the real conviction and belief of what they're doing, and really fighting for a greater good. For Brad Garlinghouse, who I'm very respectful and fond of, I think has really taken up the torch here, and fighting for what they as a company, and he personally truly believes in, is the right approach. And I think others would likely follow, but don't have the platform that he and Ripple have, don't have the resource they have, et cetera. And so in many ways, I think, there are obviously a lot of eyes watching the outcome of that. Hopefully we get some clarity, sometime soon. Motions for summary judgment have been filed from what I read in the press. So it's no longer a disagreement about the facts. Now it's just a question of law for the judge to opine on. And I'm sure there's a lot of pressure to get that opinion out sooner rather than later. And similarly with Grayscale, right? Sure. And these are really profound definitional sort of landmark cases, I think, that are going to set the stage and the future direction for this industry in the US, because there are going to be real ramifications from those verdicts and judgments as to how this industry is going to be treated and how others will respond. And some may say, hey, if this is the way that a similar case is being treated, or that the regulators are coming down in the highest courts, then we're going to move elsewhere. Or the coast is clear and this has been helpful and it's a bellwether case, and now we can proceed with our business plan. So can't happen soon enough as far as I'm concerned.
Oh yeah, and hopefully it lights a fire under Congress to also see the mess that's happening here, and they can come together, both sides of the aisle, and just get this right. Work with the regulators to get it right.
Well, I have noted that it feels like the SEC has been quite active in this space. I mean, we're not the only industry that they're regulating, right? But they've been in aggregate, and obviously not everybody agrees with the steps they've taken, and they're not the most popular decisions, but they've been active, and it's clear that they've been working hard and spending a lot of time on this. And so I'm hopeful that the courts also, speed up the pace and get some decisions out here that, like them or hate them, people will be able to proceed accordingly.
For sure. We're in a very different cycle when it comes to crypto. Bitcoin follows that 4-year halving cycle. But you have the Fed, you have inflation, you have wars happening. I'm curious what your thoughts are. And you don't have to give a price prediction, but do you think we're still in a bear market? Are we seeing kind of a bear market rally right now? What are your thoughts? And do you see light at the end of the tunnel for next year with the Bitcoin?
Yeah. Well, I mean, I'm certainly, like all of us, I think, in the space, long term, very constructive on this. It feels to me that Q4 felt like kind of a bottoming and a basing out. All of the leverage has been squeezed out of this market. The incremental seller who was debating whether or not to sell feels like they've since sold, and so the folks that are left holding here are truly the hodlers, and it feels like the market's responding to that. It's also interesting to see this decoupling of Bitcoin specifically versus the S&P. I think the correlation is the lowest it's been since some point in 2021. So we're starting to see that divergence again, where last year was really, I think, a surprisingly high level of correlation for many who felt like crypto would be the perfect hedge against inflation. What we saw was inflationary concerns, recessionary concerns, obviously the war, the stock market, and crypto followed right in sync with that, and obviously had its own trajectory with some of the debacles of 2022 in company specific, but there was much more correlation, I think, than anybody would have predicted a couple of years ago. And so we're starting to see that, separation again. I'm not quite sure what to make of that. I think one of my investors told me, which just resonates a lot with me, that we probably don't see a meaningful crypto rally here until interest rates start to come down, because there's a lot of investors who look at crypto as a long tail risk asset, and if I can go put my investable dollars into some shorter term fixed income securities and get a relatively safe and predictable 5, 6, 7%, that's a whole lot less drama and volatility than putting it into crypto. That said, if you put in crypto 6 weeks ago, you've made a pretty penny.
Yeah.
So it's always one of those kind of emotional responses. And the last thing I would say I'm consistently taken by how much FOMO seems to play into this, and just the emotional cycle specifically around crypto, where you couldn't find a new investor interested in crypto 6 months ago, and it felt like everything was going just further south to zero, and all of a sudden you're starting to get the taxi or Lyft drivers say, do you think I've missed the move in Bitcoin, or should I chase it, sort of thing. We're back to that kind of mode where the flight from 17 or 18 grand to 25 was pretty abrupt, and a lot of people all of a sudden noticed that their investment portfolio is looking a lot better in crypto, and that feels good, right? And so emotions just play a big part in it. I don't know if I'm answering your question or not, but
oh no, absolutely. It's just so, and I was just thinking as you're saying that, the Wall Street psychological cheat sheet, I think they call it, It doesn't fail. Human
Yeah.
psychology, humans, they do the same thing. It's a different day, but still
Fear and greed, you
yeah,
know?
fear and greed. Exactly, exactly. Final question here before I let you go. Artificial intelligence is on the rise. Are you guys looking into integrating AI in any way or acquiring AI companies? You may not be able to tell me that, but yeah, I figured.
Yeah, no, I can tell you we're not looking at acquiring any AI companies right now. I think AI will, we're not spending a lot of time talking about it. I do think AI will manifest itself in a number of operational efficiencies that will help just our processing of the business, particularly on the fund administration side, where that can be very labor intensive, document intensive. I was talking to a large asset manager earlier today just about some of these third-party companies that are out there that help automate the subscription documents for investing into funds. Those sort of things where there's just some AI that can be very helpful in terms of processing business flows, operational efficiencies, et cetera. I think that's probably where we will see the biggest impact in our business over the next couple of years, but not something that we're actively looking at investing in right now.
Final question, I promise. Do you think AI is a threat to blockchains in that in any way where they could over time just hack a blockchain if possible? Not all blockchains are created equally.
Yeah, I guess everything's possible, and so, but it's not something that I feel like I've got a particularly well-informed view on. I think that by its very nature, the better blockchains offer obviously an immutable golden copy of the truth, and for all to see in a transparent way. And so I think by their very definition, blockchains will serve the purpose that they've been intended, to serve, in certainly in capital markets and other areas.
For sure. Jack, always a pleasure. Thank you so much for joining me.
My pleasure. Really enjoyed these conversations. Look forward to being back again.